right, everybody. Happy Friday. We're here back on Fintech Friday. I'm Brian Dew, President and COO of FinLocker, and super excited about our guest this week. With me is Paul Diegelman. Paul's the Vice President at Fiserv. Fiserv is one of our strategic partners and relationships at FinLocker, and I'm really excited to dive into this conversation, Paul, and just really kind of pick your brain on all things, not just fintech, but going a layer lower or deeper rather, and talking about data and consumer data. So first of all, welcome to my podcast. I never thought I'd say that, but I haven't been canceled yet. That's a good thing too. Welcome.
Brian, thank you for having me, and I'm honored to be on your podcast, which is not something I ever thought I'd say. So, no, this is great, and you know the work that you guys are doing at FinLocker is something that Fiserv is super supportive of. It's great work, and we're honored to be part of it. So, thank you for having me on the podcast, and thank you for having Fiserv as part of the FinLocker proposition.
Awesome. Well, I start out these conversations asking folks to define the term fintech, right? And we hear fintech just thrown out there as a definition, and it means something different depending on where you sit, and where you sit is, I think is close to where the term really probably originated from. And so I'd love to get your perspective on what the term fintech means to Paul Diegelman.
So wow, I mean, it's an interesting question, and there's probably 3 or 4 directions that I could take it. Obviously, fintech is an abbreviation for financial technology, and financial technology has existed for decades, right? You go all the way back to punch cards in check cashing, right? I mean, no one would claim that's fintech, but that is in fact financial technology, right? In a lot of ways, I think fintech, yes, it's financial technology, but it's also to some extent an experience and a feeling. Right? You can still pay your bills with a check. You may not care for the experience and the feeling, but if you pay for, if I split dinner with you and we use Zelle to share that money, we've just paid each other, but we did it in a fintech fashion. And so it's easier, it's faster, and it's also a lot of ways how we feel about the experience, the speed of life, as Fiserv likes to call it. People are too busy to write checks in most cases nowadays, right? Everybody's busy. Everybody's got a lot of things going on. You want to do things that are efficient and fast. And so I think all of that I'm kind of cobbling together, to me, that's to me what fintech is. It's an experience, and it's a feeling, and it's a use of technology that fits into people's lives and makes their lives better because it acknowledges how people live in the first place.
I love it. And so episode 3, so it's not like I've had a lot of people define it, but you definitely took a different track, and what struck me was this concept of experience, right? That experience to me is squarely addressing the consumer, the end user. And when I think of fintech, that's among other things, I ultimately do think of the end consumer, myself being a consumer. How do I want to engage with my financial institution, whether it's a bank or a credit card or even my auto loan holder, and for me, the preference is digital. And so let's talk a little bit, let's set the stage a little bit for the audience to learn about Fiserv, because I think most people have a recognition of the brand. You guys are a massive, publicly traded international company, right? But I think most people would be surprised at how deep and in-depth you all are at different pieces of the banking system, and not just banking, but payments and all the adjacencies around that. So for our audience, just kind of tell us, who the heck is Fiserv? What do you all do, and how does the everyday average consumer touch Fiserv or vice versa?
So virtually every consumer in the U.S. touches Fiserv, or Fiserv touches them every day. But in many cases, folks don't know it because the brand is a business-to-business brand in many respects. We do have some consumer-facing brands, and I'll come to that in a minute. But by and large, the company creates financial infrastructure for use cases that range from banks to billers to consumers, really kind of anyone in between, any one part of that ecosystem who needs to move money, account for money, track money, send a bill, pay a bill. There is a host of capabilities that, the Fiserv of decades, over the last few decades has created technology for banks. That's sort of the genesis here. So every month, 25 million people log into their bank and pay a bill, and they're using Fiserv. They just don't know it, and that's okay, right? Our job is to help our clients promote their own brands, and we sit in the back. Every month, 100 million people grab their phone and check their bank balance. That's Fiserv. People don't know that, and that's okay. They're not supposed to. They're supposed to have a relationship and an experience with their bank, and it's our job to sit behind that and make sure that that experience and that relationship works. You send a Zelle payment. We are the largest reseller and integrator of Zelle. And as Zelle continues to grow in a dramatic fashion, catching up to the likes of Venmo and PayPal, we are an important integration point into Zelle. People don't know it, and we don't need them to know it necessarily. Now, in the last couple of years, we had an amazing opportunity to start to work together with First Data and conjoin the two companies. And in that class, because of that, we now have some consumer-facing brands. So just over the weekend, I was at a sports event with my kids in club volleyball, and I paid at the concession stand with a white device sitting there that said Clover on it. Well, Clover is Fiserv, right? So because of the work we now do with First Data, we have also begun to branch out into really important use cases in markets where consumers are literally seeing a brand of Fiserv. So in summary, almost 1,000 products. We're tucked into or embedded into so many things that are related to money that it's okay that people don't necessarily know it. Our clients know it, and we do our best to help our clients advance their proposition through what we do from an infrastructure standpoint.
So you all are, as I said earlier, a key strategic partner of FinLocker, and we partner with Fiserv to enable consumers who come to FinLocker through our clients. We're very much like Fiserv in that we're a B2B2C platform. When clients come to FinLocker, consumers come to FinLocker, they use the embedded Fiserv data aggregation technology where they link their accounts, and then we are bringing in transactional data for those consumers. I'm really curious what has Fiserv seen kind of since the pandemic started with respect to consumer adoption, usage, and engagement with platforms like FinLocker and other data aggregation platforms? I've read anecdotally that there's been a massive, increase of adoption. I always like to reference everyone's got a grandmother now that knows how to get on Zoom and say Happy Easter or whatever the holiday is. What have you guys seen and witnessed and experienced? And then based on what you've seen, how are you thinking about the role of consumer data going forward and what role Fiserv plays in that?
So the take rate on digital experiences when they are a substitute for a physical experience has been dramatic, right? I mean, everybody gets it, right? You're buying things online and they show up. You're ordering your groceries and you show up at the store and they're sitting there. Like, online has become so prevalent in so many facets of American life, especially in the last 12 months, when it really, in my opinion, it accelerated dramatically. And you look at some of the products that we offer that would enable an online experience, whether it's opening a new bank account or moving money between bank accounts, or if I send money from my bank account to your bank account, personal financial management, wellness apps, a literal explosion. And in the first, I'm going to call it Q1 of the pandemic, right? So let's call that March, April, May of last year, as I kind of make up, I've just now made up a new calendar term, Q1 of the pandemic. The growth just in the PFM segment of data aggregation, so just the traditional segment of folks wanting to aggregate where all their money is into a singular view, grew by 25% month over month during those months. It was that significant as people are like, wow, I've really got to start thinking about my money, my budget, my future. And it grew dramatically. And we're seeing the same with Zelle payments, for example, growing significantly. Bill payments growing significantly. The work that you guys are doing, growing significantly, right? Just the digital experiences are growing significantly, and as we all know, the pandemic has accelerated that.
And I know the answer to this. I think I owe it to everyone to hear it. It's not going to go back. We're not going to revert to pre-pandemic experiences at scale. I mean, I think it's safe to say that if the average consumer who wasn't using digital, an app, or doing online transactions, and started doing it, through the pandemic, and have done it now for, unfortunately, almost 15 months, it's not likely that they're going to go back and say, I can't wait to go drive to my bank branch and write these checks. I mean, and I came out of the banking industry, and so one of the jokes that we had with some of our bank branches that they really served the purpose of providing, donuts and coffee for their guests, because the functionality, they could do everything else on their mobile app. So we're not going back, right?
So it's funny you say this. So go back one CEO in Fiserv's history, Jeff Yabuki. Amazing contribution to the company and our employees and our shareholders and our customers. And he used to talk about this thing called the speed of life. And I mentioned it a couple minutes ago because it really resonated with me. People are so busy, right? We all have things that we either want to do or we have to do that you really, me, I'll speak for myself personally. I need things that work the way I want them to work when I want them to work, because I just don't really have the time to do them twice or to do them over some protracted period of time. And his example that I would always laugh about, because he's used it in a couple conferences, was, most of the songs you're listening to on your phone are on a CD and they're in your basement, but you don't have the time to walk to your basement and burn them to your phone. You go to iTunes and you spend 99 cents and you buy them. Now, I think fast forward, now you don't even do that. You just pay $9 a month for Spotify or whatever. Like, you don't even have time to go to iTunes and buy them. Like, people just want what they want, and things need to move at that speed. And I think those that are winning in the market today are moving at the speed of life, and they've got their finger on how is the speed of life changing. And in so many ways, it's accelerating dramatically in just the last year.
Yeah, it's fascinating. And so I, as you know, I came out of the mortgage industry before joining FinLocker. So 28 years in traditional mortgage banking. And mortgage itself is probably still one of the more antiquated financial, industries or sectors. And it's, the industry's trying to push to digital, but there's still just so many components of the process that require, documentation, paper versus, digital. And it's not to say that we're not accelerating, because it is accelerating, but I think when I look at other, either lending products or services versus mortgage, it's still clear to me that there's a not so much a lack of adoption at the consumer level, it's really at the company level, at the mortgage company level, and to some degrees at the loan officer level who's engaged with the consumer. What's been interesting to see is, big company, Fiserv, right? When I think of Fiserv, I think of how you guys power close to 50% of the U.S. core banking platforms, right? Is that fair to say, somewhere around there?
Yeah, it's about 40%. That's right. We are the largest provider, and we have roughly 40% share.
That immediately speaks to me as, well, I got to be a big bank to get access to Fiserv, or get access to the Fiserv technology, which is not true anymore, because there's companies, and FinLocker's one of those, and there's others of your clients who now have built technology that brings the same functionality and consumer experience that the biggest banks get from Fiserv for their customers to smaller institutions. So while we talk about adoption at the consumer level, I think there's also been a massive adoption at the smaller client level. And when I talk about client, I'll say mortgage lender level, that makes digesting technology a little bit more, it's easier and more affordable. Is that something that you guys are seeing kind of across the different verticals that you serve today?
Yeah, and 100%. And I think it depends by product, right? Some products were built and they're only for a bank, right? They need a money transmission license, or they're built for a bank. But there is out of our roughly 1,000 products, there's quite a few of them that are used by smaller and mid-sized businesses. And what you and I work on together with aggregated consumer permission data, or the connections between all the banks through Fiserv over to FinLocker, has been an area of tremendous growth, not only for us, but for the folks that our aggregation product competes with, folks like Plaid or Yodlee, Finicity, other names that are well known in that space. And yes, so if I jump to that topic for a second, if I can talk about aggregated data, the use of the data when properly permissioned by a consumer has absolutely exploded, because there are fintech apps, there are tech apps, there are legacy platforms, there are wealth platforms. Like, the number of places a consumer wants to share their data has grown significantly in the last couple of years. And Fiserv's in a unique spot, because where that data sits often is at a bank or a credit union. We run roughly 40% of those banks and credit unions, because those banks have entrusted us to generally be their back office. So in this space, we both run many of the sources, and we are capable of properly and privately providing that data to the other endpoints where the consumers want the data shared.
So you said a phrase that I want to kind of poke at a little bit: consumer permission sharing, or consumer permission consent to share. When I hear that, it almost implies that there's something else that potentially is happening with consumer data where they haven't necessarily consented and permissioned. And is that something that is as a consumer, as a company who's going to help consumers aggregate and share data, is that something that the industry is kind of concerned about? Is the players who maybe are not necessarily getting that consent from a consumer, and how does the U.S. differ from other countries when it comes to the sharing of asset data or financial data? And there's a lot there to unpack.
So I'm ready. So let me work backwards from the end. So in certain countries, some in the EU, Australia, for example, consumers have a documented data right. So the information, if you and I lived in the UK, the information at our bank, we can share that. We have the right to share that data. There's now it's a much smaller banking ecosystem with a couple hundred banks, right? It's not 11,500 banks like we have here in the US, which creates its own level of complexity. But in some countries, you have a documented and regulatorily provided data right. The U.S. is working towards that. And so the work that we do with the CFPB, the OCC, we're members of FDATA, FDX, like, there's a lot going on here to ensure that consumers can in fact share their data in a fashion where it is only shared when they have explicitly provided their permission to share it. And when the consumer wishes to cease that sharing, there is a mechanism to allow them, or the app with which they've shared it, to easily shut it off. So, I answered your questions,
Yep.
Kind of from the last to the first. If you go way back to the very beginning of aggregation, I mean, it's why it's called aggregation, because what it means is one person wants to get all of their data from all these places aggregated to a place, whether it's an app or a PFM or what have you. And when this concept, when this came up, it was fairly new, it was fairly unknown, so a lot of it was done with screen scraping. Where was my username and password in this process? Nobody really knew, so it was sort of blurry. And yes, over time, pools of data have become available that aren't necessarily any longer permissioned. I think the market's doing a really good job of snuffing that stuff out in this space. And so, yes, we do, for when we talk about aggregation and connectivity of consumer data, the permissioning piece is absolutely critical, not only because it's the right thing to do, but it is the regulatory thing to do, and it's the best way to protect consumers and the folks with whom the data has been shared.
So, screen scraping. I think people maybe conceptually understand that. Can you talk a little bit about what that really is and what it means and how it happens?
Yeah. It was the original way that aggregation or connectivity was created. And so what happens is, let me just give you an example. If a consumer comes to the FinLocker site and wishes to share their banking information, there's a variety of ways that Fiserv can get that information for FinLocker, and then you'll have it to do all the things you do with it. One of those ways is called screen scraping, and in that process, it's a form of reverse engineering. In my system, with certain banks that are not capable of doing API connectivity with me or something else, I actually have code that is written that goes to the correct URL and that mimics the login of the consumer and then pulls out the data that is necessary for FinLocker to do the things you do with respect to mortgage. So screen scraping is kind of what it sounds like. Technology that I have or others actually logs in and scrapes the screen and then provides that data to you. So that's the original version of how aggregation worked. It is still in existence. It will be in existence despite what others will tell you for some amount of time, because there's just too many banks, many of whom don't have the capability or the staff to set up with us or others in an API fashion. So the industry's looking to snuff it out, but it's going to take some time. But that's how it works. That's what it is. Is it necessarily bad? I don't know that it's necessarily bad, but it is slowly becoming more and more frowned upon as bank technology improves to the point where we can share in some other fashion that's less intrusive, let's call it.
I love it. So let's pivot a little bit and think about it from the lens of the bank. The source of the data, right, is the bank. So if I'm a consumer and I'm in FinLocker and I want to link 3 bank accounts I have, a couple credit cards, a mortgage, et cetera. What's the environment like at the institution level with respect to all of these platforms that have popped up, over the last 5 or so years? Is there a sense of, from a bank perspective, especially maybe the smaller banks, is I gotta kind of hold my ground and protect my turf, or are they more open to their customers aggregating data across other platforms?
So this is a question that I would argue Fiserv is uniquely suited to answer, because we are the only data aggregator or provider of connectivity that is also running those bank sources, right? Roughly 40% of the space sits in our data center. And so we both want to advance the concept of sharing information, while at the same time we're super focused on securing it and keeping it private, because all sources need to be kept secure and private, but 40% of them, we're actually running this on their behalf, and we have that as our responsibility. So the banks all take different approaches, right? The largest banks, it's hard to really say. They might not necessarily be bought into a consumer data right in the first place, right? They've got the ability to offer every service. I'm not the only guy, I'm not the only company that can have 1,000 products, right? Trillionaire banks could have 1,000 products too. So there's sort of this sense of that kind of floats around. First is there really a consumer data right? Okay, not everyone sees that the same, and that's why I think regulators are jumping in an attempt to help shape the answer to that question. After you get past that question of is there a consumer data right, then I think you've got to there's a whole bunch of things you've got to solve for, but one of them is, what does aggregation do to the bank site itself that is being aggregated? So when when the very first PPP loans were dispersed, and the first stimulus checks went out, on those days, aggregation took a hit because bank sites were set for a certain amount of traffic. All of a sudden, you had way more traffic than the bank sites ever expected, because no one has ever gotten a stimulus payment before, right? Like, all of a sudden, there's a lot of people going, did I get my stimulus payment? It's 8 in the morning. I don't see it. I'll check at 9. I don't see it. I'll check at 10. I don't see it. I'll check at 11. So the activity on the bank sites for a couple of days was incredibly burdensome. And aggregation had to slow down and actually step out of the way. You guys may remember, we had some days where, like, hey, these sources are not going to support FinLocker or anyone, because they must support their consumer customers who need to see if they've gotten their stimulus money. So, there's You asked a really simple question, and I've probably made this way more complicated than it needed to be. But the sites are set to run based on the traffic they expect, and part of that is they expect aggregation traffic.
Yep.
And they see aggregation traffic in different ways. Sometimes it's a burden, sometimes it slows them down, sometimes they don't even notice, right? So there's 11,500 banks and credit unions. There's probably 300 answers to your question as to whether they notice, care, don't care. I will say that we've had a number of banks come to us directly and want to talk about ways that fintech apps can be more easily integrated into the bank's offerings. Right, because at the big end, right, the trillionaire banks could all have 1,000 products too. But if you're a credit union with, say, 300,000 members, right, you may want some better mortgage technology than you can get on your own. You may want some better student loan or card technology. And so the banks have in fact also come to us and said, hey, how do we stitch together with some of these fintech apps that are doing things that create the kind of experience consumers want, and how do we glue them into our ecosystem in the most efficient way? So that's another thing that's certainly underway, and I imagine you're seeing that yourself.
Yeah, we're definitely seeing it in the mortgage space. So most of, when you think about the non-bank mortgage lenders, they're typically a monoline. They offer mortgage. That's the only product they offer, and in a lot of cases, they offer the product at a point in time, and then the consumers hand it off to somebody else who's going to service the mortgage itself. And what we're starting to see with those types of institutions is they're trying to think differently about their ecosystem and their consumer experience, not just inside the transaction that they're where they make money, but ahead of the transaction. How can they leverage some of the fintech products that are out there to help, groom and prepare prospective clients? So there's up the funnel activity. And then how can they use similar or different technology as an engagement post-mortgage transaction for a customer for life? And so it's fascinating to talk to folks and get their take on how they're thinking about a more cohesive consumer experience, not just in the transaction itself, and it's having to compete with push button get mortgage, right, and some of the other large fintech lenders that exist who also have massive marketing budgets. So it's been, from my lens, from my seat, it's been fascinating to just watch the evolution inside a mortgage. Like we talked about earlier, the pandemic has accelerated not just the consumer usage and adoption, but I think also smaller financial services providers like mortgage companies are thinking, how am I going to compete in the future with these platforms that are very much, in the fintech space? It'll be fascinating to watch it unfold.
The thing, and you and I have talked about this before, but the thing I've always found fascinating about FinLocker is that many types of financial transaction don't require a whole lot of education, right? I can send a Zelle payment, it's fairly simple. I can make a bill payment, it's fairly simple. Like, I can do lots of stuff that's fairly simple, and I don't need a lot of education. But a mortgage is a significant transaction that some people only do once, twice, not that many times. It has huge implications. It's very complex. And I know I never told you. Years ago, my sister sent me a text, and the text said, "What do I need to know about getting a mortgage?" I'm like, wow, this is not suitable for a text exchange. Right. So, that's one of the things that we find so exciting about working with you guys is that when consumers begin this journey, and they need this help and this education and all the other things that FinLocker provides, part of it is we can provide the data that they've asked to share with you, and you can then help them do something that I think is complicated, and it's not a muscle people flex that
That's
often.
right.
You kind of forget in between, there's a lot going on here. So that's one of the things we love about what you guys are doing in wellness and helping people get mortgages.
Oh, thank you for that. So we're at the fun part of the talk here. It's hard to believe we've been going here almost 30 minutes. So I like to close by giving you an opportunity to share a little bit about yourself with our audience. So hopefully, many of our watchers and listeners are learning a little bit more about Fiserv and how Fiserv actually is in and around the mortgage industry. But let's go a layer below and figure out who the heck Paul Diegelman is, and what do you do when you're not solving the world's financial problems?
Well, the first thing is I'm open for business 24/7, so I am happy to solve any problem anytime. But it's funny. I just got back. So my daughters play club volleyball. I have twin daughters who are 15, and they just had the best season. I guess I should probably say another best season. It's just been, there's so much I really like about volleyball. Club, the travel, the teams, the whole thing. It's just been a great season. We're winding down, which is kind of a bummer. So, I don't know what I'm going to do for the next couple months until school volleyball starts.
Yeah.
But the club volleyball has just been great for my wife and two daughters. And so if anybody wants to call and talk about volleyball, I got free time now.
My youngest, she's 23 now, so we're a little removed from club and high school volleyball, but she was a clubber, and those were fun tournaments. I mean, a lot of long Saturdays sitting in a gym with a lot of 30 courts going on and all the different chants and cheers and yelps and screams, but it was those were fun, definitely fun times, and it's been amazing to watch. Like our nieces are club volleyballers, and they're all over the place. Orlando, Vegas. It's like, oh my God, it's getting out of control. But it's those teams are such tight knit groups, and it's fun seeing the girls in the hotel lobby just having a good time, in between the game action. And of course, I think the parents maybe aren't in the lobby; they're over in the hotel bar having an equally good time. So,
100%. All of that. You've clearly seen this movie. What position did your daughter play?
She was a outside hitter. I think that's what it was. I think
Excellent.
Outside hitter.
Yeah.
She would run and jump and
so I have a nice. There, we're going to need that for some kills. Yeah. I've got a DS and I've got a middle, and so it's pretty nice. We can get a lot of stuff going in the backyard with the two of them.
Yeah, that's pretty cool. And obviously they're on the same team. That's helpful.
Well, interestingly enough, they're in the same club but not on the same team, right? So the club season was awesome because they only had a few tournaments together. Otherwise, we were everywhere every weekend with one of those kids. Like, wow. I can't get enough of this.
Yeah.
So keep them on two separate teams. That way I get more than anybody else would.
Good for you. Well, I miss it for sure. And you're getting into the heart of it now because it's club and high school where, I'm imagining they're probably playing at a pretty good level. So. Well, Paul, thank you, man. Thank you so much for joining. This was awesome. I know that I learned, like I always do when we talk, a little bit more about kind of consumer permission data. I know our audience is going to learn a little bit more. In the event that someone wants to learn even more, what's the best way for them to get in contact with you?
Find me on LinkedIn. Paul Diegelman, I'm easy to find, and I'm happy to talk to anybody about data, Fiserv, volleyball, whatever, anytime.
Metallica too.
Metallica, right? Add that to the list, 100%.
Awesome. Well, Paul, thank you, man. Thank you so much.
Thank you for having me.
Thanks for joining Fintech Fridays, and everybody have a great weekend.
All right. Thank you, Brian. Have a good weekend.